Hey, it's Andrew here with Try True Home Loans, and today I wanted to talk about just 4 quick tips to help you start saving for the purchase of your first home. This is a huge challenge because it seems like the prices of homes are going up faster than most of the pay raises in income levels at jobs that are available. The number one thing that you should do is set up a budget. So create a budget that you can work from and then start to look at how you can start to cut back, save money, skip things. The only way to save money is to not spend it somewhere else. The second tip is after you've started saving money, create a automated transfer into a savings account that's going to be for your down payment. You've got your paycheck coming in, you're paying all your bills out of one account. The extra step of going in and transferring 3, 4, 5,000, whatever you can, you want to automate that so it happens no matter what. And over time, you'll start to manage your budget without that money being considered at all. The third thing, this one's a little bit, kind of crazy, but maybe consider looking at starting some sort of a side hustle. If you're an artist or a photographer, sell your art or your pictures. If you play an instrument, maybe start a band and start playing gigs. If you're good on computers, offer computer work. This extra income that you could create could go directly into your savings account, never even in the budget of your normal life, and go straight towards the down payment of a property. And then the last thing that might help you is when you're ready and you have some savings, because no matter what, you're going to have to spend some money to buy a house, is look at down payment assistance programs. So there are lots of options. There's probably more than 100 different programs available at any one time. There are different criteria. A lot of them are location based, state based, but there is always a program to help first time buyers or even second or third time buyers that need down payment assistance, sometimes even closing costs. Those programs tend to be government backed. They could have limitations of how much money was put into that fund. And when that money's gone, that program goes away for the year. There's always something. And you could potentially get a down payment assistance loan covering your down payment. Then you're only worried about closing costs, which tend to be 2 to 4% of the purchase price. Let's say potentially a family member wants to help you. Your parents want to help you buy your first house now that you're married, or you have a kid on the way, or they just want to help you and they've always promised that. They could cover your closing costs with a gift donation, and you could potentially get into your first house with zero cash. The other piece of that is when you're working with your real estate agent, you can talk to them about negotiating some type of a seller credit. It works in the same way as that gift fund money. It's money from the seller that now you can use towards your closing costs. The idea of saving 20% for a down payment is probably not possible. I say that not to be rude or anything, but if you're worried about trying to save 20% to put down on a house here in California, it's likely going to take you forever. And by the time you get there, you'll have spent so much money on rent that you could have actually bought. We rarely do 20%. Most of the loans that I do are FHA 3.5% because I work with a lot of newer buyers. Conventional 5% down. We have a 10% down program that has no PMI, which is private mortgage insurance. In all this, if you can set up a direct deposit, create a budget, maybe work some sort of side gig to save some extra money, find a down payment assistance program that works for you, maybe get a seller credit or gift money from one of your family members, and you buy a property. You might not have the best rate right out of the chute, right at closing, but over time, the opportunity will come where you can lower that interest rate. But let's say you never are able to lower that interest rate because rates are just crazy. They're fluctuating all the time. If real estate works as it's been historically, your property will go up in value 3 to 5% year over year over year. And that value will outpace your interest that you're paying on your monthly mortgage. So acquiring the property is going to benefit you greatly to your overall income because now you're going to be getting equity based on home values going up. If you want more information on loans, down payment assistance programs, maybe best ways to work on your credit as you're saving for your down payment, please reach out. I look forward to talking to you guys. Talk to you soon.